Welcome to Morphic Labs, and today we are going to be talking about the retail quant structural edge, a mathematical analysis of the capacity constraint and the nimble trade advantage. We are going to be continuing where we left off. We're at chapter 6, strategic implications. But before we get into that, do me a favor, hit the subscribe button if you want to keep up with more content like this. And if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data analytics. Plus, I have a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven and hybrid methods aggregation, implementation and selection criteria. If you're interested, the links in the description. You just gotta sign up to be a free member. Now let's get into it. Strategic implications. The mathematical framework developed above yields several actionable conclusions for the retail quant. Strategic principle 6.1. The capacity ceiling rule. Never build a strategy you cannot scale down. I'm going to read that one again because it's very important. Never build a strategy you cannot scale down. The optimal retail quant strategy targets an addressable market between 100K and 5 million in capacity. Small enough to exclude institutions, large enough to compound meaningful wealth. Table 11. Recommended strategic posture by account size. Account size, optimal strategy, target return, next position, holding period are going to be our columns. Now, for an account size of 10K to 50K, the most optimal strategy is niche crypto pairs and micro cap stat arbitrage. And it has a target return of about 40% to 100%. A max position of 500 to 2.5 or 2,500. Holding period, minutes to hours. For an account size of 50K to 250K, the most optimal strategy is small cap stat arb, options, vol arb, target return about 25% to 60%, max position 2,000 to 10,000, and a holding period of hours to days. An account size of 250K to 1 million has an optimal strategy that is a recommended multi-strategy micro alpha. And if you don't know what micro alpha is, go look at my previous videos on the retail quant and you'll have everything you need to understand what micro alpha is. But essentially, given 250K or a million or anything in between, the most optimal strategy is just multi-strategy micro alpha, which is just exploiting as much of these smaller assets that exist out there as you can, right? Especially assets that don't have the most optimal average daily volume for institution, or the spreads are just too wide for institution to take, or the market is just not liquid enough, or there's all types of reasons why you would want to have a multi-strategy, a micro alpha approach. But the target return for that is about 20% to 40%, a max position of 5,000 to 25,000, and a holding period of days to weeks. Now, with an account size of 1 million to 5 million, you're not really big. It's still very small, but you're just getting started in the game. You just got your first taste of what actual money is. So the most optimal strategy is mostly strategy diversification and a slow increase. A target return about 15% to 30%, max position 50,000, holding period days to months. And that's about it for the strategic implications. If you're interested in keeping up with more content like this, hit the subscribe button. And if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data and analytics, plus an advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven hybrid methods aggregation, implementation and selection criteria. The links in the description. Just gotta sign up to be a free member, and you leave it all to yourself. And that's about it. I am out. Bye.